Welcome back. Hope you're having a fantastic day. We're going to jump in and take a look at the markets. The Dow Jones ended a little bit flat today, up just a third of a percent or about 0.15. S&P down 0.18, almost 1%. The NASDAQ was the big loser today, down 2.35% because of the snap warnings that dragged the market down. That was the big news of today. Snap's warning sends shock across digital advertising as investors flee social media stocks. The social media companies were already down this year, but Snap came out and warned that the company's earnings had worsened since the company reported its quarterly results in April. And they were telling their employees that the macro environment has deteriorated further than they anticipated. So they were down somewhere around 43 to 45% today. So interesting times to see what's going on in the tech sector. Bill Ackman out today talking about inflation and what the Fed has to do. And he said if the Fed doesn't do his job, the market will. And it's happening now. The only way to stop today's raging inflation is with aggressive monetary tightening or with a collapse in the economy. So he must have a short somewhere in the market. NASDAQ or Nordstrom is raising its full year outlook as first quarter sales top expectations. So it's kind of all over the map. Best Buy was down a little bit. A lot of earnings are coming in down for a lot of different companies, obviously, because inflation is starting to affect the consumer, affect their ability to spend, and that's creating problems and reverberations throughout the economy. Housing market, we've been talking about the housing market a lot lately and how rising interest rates are going to affect pricing because of the affordability. So sales of newly built homes this is new construction, tumbled over 16% in April, while prices are still up. Again, the market is hyper local in real estate, so every market is different, and inventory levels make a huge difference. So a couple of things to keep an eye on are interest rates. Obviously, inflation. As long as inflation remains high and keeps ticking up, the Fed's going to have to keep raising rates to combat inflation. So if mortgage rates continue to rise and get up into the 6-7% range, that will really affect the real estate market drastically. So right now we're seeing inventory levels start to rise. We're seeing price reductions across the board because people just can't qualify for what they qualified before. But at the same token, there are still houses selling with, multiple offers in days, if not, the day it goes on the market in some areas. So it's kind of all over the board right now, but the market is starting to correct and adjust in a lot of areas. We're seeing price reductions and we are seeing values come down in a lot of markets. Of course, prices were way up there to begin with, so it's all kind of relative. New construction is a big one that I've been talking about. You really want to keep an eye on new construction. That's where prices will adjust the quickest, and the builders have to get those houses off the books. So they are highly incentivized to sell. They will take losses to get that inventory off the books, and they'll pull back on new starts until the market corrects and adjusts, but they have to finish what's in the pipeline. And there's a lot of units in the pipeline right now. So a lot going on in the housing market, a lot going on in the stock markets, and a lot going on in corporate America with earnings. Of course, we have the FOMC meeting tomorrow. We're waiting to hear about that. And then we've got the CPI index coming out again in June. So a lot of big news and a lot of market moving news coming up. So let's take a look at the markets. This is Dow, or this is the Bitcoin price on the hourly. Still not much to talk about here, kind of doing the same thing, consolidating sideways in this $28,000 to $31,000 range, just kind of bouncing, and the major altcoins are following along until we get the next big piece of news, which markets are kind of waiting for, which would be the FOMC, the direction, and indications from the Fed in terms of what they're planning to do after the next meeting, if they're going to continue to raise rates, reduce the balance sheet, things like that. Bitcoin is consolidating at its lowest level since back in December of 2020. Price is now kind of hovering right at that $29,000 level. Again, that's the biggest level I've been watching. I thought for sure last year it was going to break below that and revisit those previous all-time highs. We had this irregular correction. So the question is now, is price going to break this 29,000 level? My thoughts were that it was going to be very difficult unless we had some serious economic events happen, because there's just so much support at this level. So far, it's holding up. We did have the wick down to 25,400. So we'll just have to wait and see how it holds up, what the Fed does. If the Fed continues to be mega aggressive, I think this level will probably potentially break. And then the question is, where does it go from there? Does it go back down to that 20,000 and hold? Does it get down below there? A lot of it depends on the macroeconomic environment, and retail is out. The general retail investor is out of the market right now. They're not interested. There's a lot of institutional capital waiting for lower prices. They're not going to jump in at scale right now. We have not seen them jumping in at scale right now. They are waiting for lower prices. So we'll just have to see how the markets play out. Here's the Dow Jones closing right here, just unwinding a little bit of that move yesterday. It was down as much as 300 or 400 points today, and then snapped back at the close to kind of pick that up. Whereas the NASDAQ closed down a little bit today, reversing all of the gains from yesterday. S&P reversed about half the gains from yesterday. So market is continuing to kind of work its way down slowly. Like we've been talking about, it's not going to be an overnight thing. These price adjustments are going to take a little bit of time to kind of work their way down and level off, getting closer and closer to these pre-pandemic levels. So we'll have to see where they ultimately play out. And let's take a look at Snap and see what that looks like. Snap's looking like right now, if you look at Snap on the hourly, kind of looking like Luna the other day. And ultimately it was down today, I think at its lowest point, looks like 43.8% drop. Well, let's see what it looks like on the daily. That was hourly. So on the day, yeah. So let's see what this daily looks like. So the ultimate, yeah, 47% down on the day today. So we'll just have to see how that plays out. If it, gets a nice little bounce tomorrow or over the next day, being as oversold as it is with this knee-jerk reaction, looks like it's trying to pop a little bit right now, trying to find a little bit of a bottom here. So we'll have to see if that comes back. But a lot of the other stocks took a big hit today as well. So the markets are kind of all over the map right now, still working their way down, trying to unwind and digest, and waiting on talk out of the Fed, waiting on the next inflation print. Some economists are saying inflation has peaked, and that we're going to, start working our way down there. So we'll just have to wait and see what happens there. And now we have comments we're waiting from the Secretary of Defense, Anthony Blinken, on China and what's going on there. So if war continues to escalate, we get into a multi-country conflict. If the war in Ukraine escalates, that will weigh heavily on markets as well. So very interesting times right now across the globe, the global macroeconomic environment. A lot of risks out there and headwinds for the markets right now. So this is a good time to be defensive, a good time to just play it safe, wait and see, build your cash, and be ready for the reset, because there will be some really, really good opportunities coming up here in the near future as markets continue to reprice, unwind, and get ready for the next big bull market season.